Hello, everyone. Second attempt at setting up this live stream this morning. Really plagued with technical glitches. Right, we are ready to roll. Thank you. First of all, thank you so much for your patience and joining us this morning for a look at the Forex market through the prism of VPA. Hopefully, we've got some time to have a look at Bitcoin because that's doing some amazing things at the moment. But I think I'll go straight to sharing my screen. There we are. Where's it gone? Down there. There we are. All right. Those of you who were with us for the session at the beginning of the week, the sort of topic of the live stream was to try and how to establish what kind of market condition we can expect when we come to our screens to trade. And one of the ways we looked at with an example from cable was to see what the slower timeframes were doing and using the structure of the chart itself, using support and resistance levels, which, as I explained on Monday, you can do manually, or as I do, is I use our quantum trading Camarilla levels. And as I explained on Monday, these are levels that are calculated for us for time frames up to but not including the hour. They are refreshed every 24 hours. So every time the market rolls over at 10 o'clock our time, you will get new levels for the next trading session, the next trading day. But the interesting thing about this indicator is that on the hourly chart up to and including the day, the levels are there for the whole week. And it's really, really interesting because this is the hourly chart for cable that we were looking at on Monday. And during our live stream, we were here. We can see here there'd been a nice move higher at the London Open, which is 8 o'clock. These are all, by the way, UK time. So when you see 8 o'clock, that is that is when the London Open is for us. Obviously, a different time in different time zones. And we were here. We were talking about here between 9 and 10 o'clock. And what I explained at the time was the most interesting thing about the chart structure at this time was, first of all, where was it in relation to the Camarilla? And we can see here we have what's called the R1 and the S1. And this zone, if you like, this area, as denoted by the Camarilla, is what's called a buffer zone. It's a neutral zone. It's for all intents and purposes, it's a moving sideways zone. And whilst this is the hourly chart, in that candle there, well, certainly in this candle, there would have been a trading opportunity on the faster time frames. In general, cable really isn't going very far. And we also looked at how the pivots help us to mark out the beginning and development of a congestion zone and the end of a congestion zone. And it's not, we have one here, but they actually coincide with the top and bottom of the R1 and the S1. Because congestion zone, understanding congestion zones, recognizing congestion zones it's just so important. They appear in a distribution, they appear in accumulation, and then you look at what the volume is doing. But in this in this session, I really just want to look at it from the perspective of what the price action is doing and what it is telling us, what is likely, what is it anticipating in the session ahead. Well, this is Monday. And this was Monday. This was there wasn't a lot of news on Monday. I think I said at the time on Monday that all the kind of explosive news to do with inflation was coming the rest of the week. And in fact, we've had the CPI this morning for the UK, which has produced a little bit of a reaction. We'll have a look at that because, again, we've had volatility and we've gone straight back into congestion. So again, what kind of market are we facing? And I said on Monday, if you can recognize it, it will allow you either to step aside and wait for a better condition, a market condition where you are the probability of being able to take a trade is in your favor. And as I said, this is what we'll see later on. But I just want to finish talking about the hourly chart. So see, it went to now. When did it actually? So what we're waiting for, we're actually waiting for a decisive break one way or the other. And when it came at, we can see that's 15. This is on Monday. It was 15. Is 3 o'clock in the afternoon our time, where there was a burst of volatility. We had a candle to the downside, a very nice candle. There would have been very nice trading opportunities in there, but look how long you would have had to wait for a good decisive move. It triggered the volatility candle, the volatility indicator, I beg your pardon, giving us a volatility candle. Sometimes people I've heard describe this as a master candle, but it's only recognized by the size of the candle. And there was a lot of volume underneath it. And when you have this trigger, the immediate reaction is pretty much always a retracement into the spread of the candle. Now, what I also mentioned was that after the R1 and the S1, which tells us whether the price is in a sideways movement, is in a range, it's bouncing along what we call this neutral zone. The other two most important levels, if you like, in terms of the most important levels on the Camarilla is the third and the fourth. So we had that at 3, then we had another one with the same amount of volume, and there really wasn't an awful lot of follow through. We go back to VPA 101. We are moving towards the end of the session anyway, with in the American session, but you can see that the volume is dying away. The spreads are narrowing on the candles, and it's moving sideways, but you can see how much it's hugging this third level. So there is no decisive break lower, and it moves it along. We have a little burst of volume going in. I think that's at rollover, so you would expect an inrush of as positions are closed out. But you can see pretty much during the Asian session, it's kept to this level, and this is when we get to 7 o'clock. 8 o'clock this morning, where we had a little bounce up again. This is on Tuesday, not Wednesday. Today we had a little bounce higher again. It's the third level which is holding, and so it goes on. But it's this third level which is the important one, and in fact wasn't broken until yesterday. Again, very similar pattern to price action here. You had a volatility candle at 2 o'clock. This is just before the cash open, the what we used to call the market open back in the day before we had 24-hour markets. It was always at 2:30 UK time. We call it the cash open. And volatility came in, participation, very high participation level. Again, I would consider this like a trap move, because you see, if you try and imagine the psychology of traders waiting for these decisive moves. I'm not saying they're going to be sitting through the Asian session, but they've looked at their charts and things are moving, but they're not moving with any great degree of momentum, of pace. And so suddenly you get a candle that goes to the shoots up there, reasonable amount of volume, ends up with a doji, which is really indecision. Sometimes you get a reversal. You look at that, then you get a big move to the downside. Great, at last, because we have been waiting for cable to fall. If you recall on Monday, I mentioned this all-important level that I'd taken off the monthly chart, and cable is below it. So everyone's looking for perhaps this to fall, also with the dollar to move higher, as we've seen on the Dixie chart. So you see this. Ton of volume comes in. Great. Now I'm going to go short. What happens to the next one? We have a ton of volume going in again. but it doesn't go very far. There's no continuation. And we have a sort of repeat that we saw at the S3 on the S4, and with the whole thing kind of fizzles out. And I suppose this is kind of, it's symptomatic of this market at the moment. It doesn't really, I'm talking about market sentiment, I'm talking about the indices. It doesn't look like it wants to fall. It's got all the characteristics of a a correction. I'm not going to say bear market. I'm going to say of a correction. It kind of is sort of half-hearted in wanting to go lower. And you look at the shape and the pattern of the daily chart, certainly on the futures, on the MNQ, which is the futures for the Nasdaq. You look at the SPY, you look at the QQQ. So in your gut, you think, yeah, it's really struggling. But there hasn't been enough of a trigger to get it moving. So when something happens and there's an injection of volatility, there's an injection of pace, there's an injection of momentum, everybody gets terribly excited and they jump on and they try and jump on the move, thinking, oh, maybe this is it. Waiting around for a decent move is tough. You have to be disciplined. So, and then what happens? It all comes to not a grinding halt, but a halt. And this is where these levels become really, really useful, because you can see here it stops again at the fourth and it does the same thing again, and away we go. So there we are at the moment with cable. Now, what I've meant to say on Monday, I'm doing my explanation and how I use levels, how I use it together, because S&R levels are hugely important. They're the element of volume price analysis, but over at Quantum Trading, which is our software site, David has done, I don't know, 20, 30 videos just on Camarilla, on how you use it. There are videos on every single indicator. We have a YouTube channel, and they're very short, so you don't have to sit there for hours and hours and hours, but they just explain different elements of how they work, what they will do for you, and why we think you should perhaps be incorporating them into your own trading. So that's what I wanted to say on the hour. But to move to a couple of other things, this is the 1 minute chart, and again we had the CPI this morning. This is at 7:00. The data seems to be coming out. Back in the day, used to come out about 9:30, but it comes out at 7:30. Again, we have this, we are in consolidation, but above the S1. As I said, these levels are different to what you see on the hourly chart. Huge injection of volume because CPI has come in higher. Now, under normal economic circumstances, when the CPI is higher, the Bank of England would be expected to think of raising interest rates. Rising interest rates, the currency should strengthen. That is the classic, if you like, explanation for that. But given here in the UK, we have no growth, we have rising unemployment, we have an economy that's basically in the toilet. What we have is stagflation, which is the worst of all worlds. But not everyone understands that. So what happens? You have an inrush of volume, you have a big up candle, but it triggers this volatility because it's outside the true range for this particular time frame. What happens? You have a classic retrace into the spread of the candle, but we know it's probably not going to go because we've also got a wick to the top of the candle. So we have an anomaly, and then we have the classic reaction that you would see in whenever the volatility indicator is triggered. And this is where we are, except at the moment we are on the S3 on the R3 of today's Camarilla levels, and we've been bouncing around. Horrible price action, let's be honest. The attempt to break lower, just really sort of meandering. It's like a washing line at the moment. Lots of volume going away, price isn't going anywhere. And the danger now is it goes back into the buffer zone, the R1 and the S1. Now we might get some movement with the US data later on in the afternoon. So if you are on cable, just hang fire, see what happens. What have we got in the US? We have, we've got PPI in the US today. So if we get a strong reaction in the dollar, then the chances are you may actually get it in the in the in cable as well. Just one of those days, one of those times of in the trading week and in the trading year where we just have to be patient. Now we've got other indicators that can help you try and determine what the not just what the individual pairs are doing, but also the individual currencies. That's the CSI. But I know David, he's going to talk to you about that, and also a couple of other aspects of as I said, of trying to gauge this market condition. And I think there is something going on. So I'll pass over to David.